Well, Chinese President Xi Jinping joined a virtual summit with European leaders on Monday. President Xi emphasized that both sides will keep promoting the comprehensive strategic partnership and to jointly uphold multilateralism, follow the principles of peaceful coexistence in the face of global challenges. Now, a major goal of the meeting is to discuss a China-EU investment agreement that could be finalized by the end of this year. Now, the agreement, which would create new investment opportunities and protect the interests of European companies doing business here in China, has been in the works since 2013. So why is it taking so long to agree on the actual terms? What would make both sides happy? And given the tense international geopolitical environment, what might a new economic partnership between China and Europe look like in a world ravaged by COVID-19? For more on that, we are joined in London by BASTIN, senior lecturer at the University of Southampton. Momentarily, we're also going to be joined here in Beijing by YIFAN, senior fellow at the State Council's Development Research Center. Mike, first of all, welcome to the show.
Welcome. Yeah, thank you.
So, Mike, I want to begin by asking you, if we take a look at the numbers, in 2019, China was the third largest partner for EU exports and the largest destination for EU imports. Europe wants to increase its market access here in China via the Comprehensive Agreement on Investment. That's the official name for this bilateral treaty. This deal has been in negotiation mode since 2014. So where do we stand from a European perspective on progress right now?
I think there has been, there was a brief published on Friday in the lead up to the summit. I think there has been some progress, and I think access is improving. I think on the EU side, there's concern that a number of bilateral agreements have been signed. I think there's 15, for example, memorandums of understanding have been signed by individual EU member states with China in terms of the Belt and Road initiatives. I think they're looking to present a more unified strategy and get all member states on board, and that's why I think Merkel is really pressing for at this summit. I have to remember this is a very, very complex negotiation as well, and the Chinese economy, while it's developing, is not at the developed stage across all industries as many European member states are.
Yeah, it is a very complicated process indeed. I mean, we are talking about two of the world's three largest economies at stake here. I'm trying to gauge the gap, Mike, between Beijing and Brussels. How close are the two sides in getting this deal done by the end of this year, which is the ambition from both sides?
I think they're fairly close. I think it's certainly achievable. I think there's a lot of political will and a lot of mutual gain here as well. So I think the EU member states, certainly some of the wealthier member states, have been ravaged by COVID, by the pandemic, and there's still no real light at the end of the tunnel. So they are desperate to improve their economic outlook. And I think on the China side as well, I think Chinese industry has developed. I think domestic industries are increasingly competitive, and they will not see this sort of wave of investment that could happen as a threat, more as an opportunity.
Well, Mike, what is the interest here for China? Because for European companies, they want to boost market access to China. We can discuss maybe later in terms of how open China's economy is right now relative to the past few years. But in terms of the deal for China, what do you think China is getting? Because we do hear and feel sentiment is perhaps not going in the right direction in terms of market openness for Chinese companies going into Europe.
That's right. I'm aware of that. What's in it for China and Chinese companies? I think it depends on the level of investment, the nature of investment. I think certainly when it comes to the service sector, which is now becoming pivotal in terms of China's economy and further modernization and marketization, then European service companies' service sector has a lot to offer, a lot of experience, a lot of knowledge. So I think if there's trust and there's partnership, and I think on the European side, they have to understand that the Chinese government has a very, very important role to play here in monitoring this investment to make sure that China does reap the rewards. A lot of European brands have been very, very successful, very, very profitable in China for a long time, and that hasn't rubbed off that positively on a lot of Chinese companies and Chinese brands until recently.
Well, the EU stated its objective is to significantly, it used the word significantly, improve the access of EU investors into the Chinese market, Mike. It wants what it calls non-discrimination and to be treated on an equal footing compared to Chinese and third country companies. What's the response from Beijing? What have you heard from Beijing in response to Brussels' concerns?
I think what the message coming from Beijing is quite clear, that the door is open and negotiations should continue, but quite rightly, this has to be looked at very, very carefully. I think there's concern that there'll be some sort of massive influx, wave of investment that could really, I think the word suffocate applies, domestic companies. So I think that Beijing quite rightly is saying, yes, that's a goal, and we should reach that as soon as we can, but we have to make sure it's step by step, and that we allow Chinese industry to develop as a result of this investment, and not simply allow the more developed Western brands to benefit more and more to the detriment of Chinese companies. So I think cautious, step-by-step, open approach from China.
Well, at least the most recent numbers from Rhodium, Mike, shows that greenfield investments and acquisitions by European companies into China is growing. It has been growing in Q1 and Q2, but on the reverse side, Chinese investment into Europe, it's been falling, especially in Q2. A recent poll from the European Council on Foreign Relations shows the change of view towards the United States during the pandemic. We saw 65% of Germans surveyed saying the coronavirus has worsened their views of the U.S. Let's put that graphic on screen right now. Take a look at this. So a recent Pew Research poll showing that Germans are right now equally divided on whether the relationship with Washington or Beijing is more important. Mike, considering this and China's willingness to continue positive business relations with Europe in spite of COVID-19, how might China's economic positioning change, you think, relative to the U.S. in Europe?
Well, I think it's quite likely. It's quite likely to change for the better, and it's not a surprise that the German public are looking more positively at China and more negatively at the U.S. and the Trump administration, which seems to just step from one minefield to another, and they reach lower and lower points. Even Trump supporters, I think, cringe now with some of the things that he and his allies say, and he makes enemies wherever he goes. So I think it bodes well for China-EU relations, and I think that the German people and the German economy are very much representative and very much leading the European way forward as well. So I think that's another positive.
Yeah, well, German investors are the largest investors into the Chinese market right now. I want to get the Chinese perspective on this and bring in Ding YIFAN from the State Council's Development Research Center. Mr. Ding, good of you to join us. Let me begin by first asking you, how close do you think we are getting to this China-Europe investment deal, and how important is it right now, especially right now, as the world suffers from a global economic slump, to get this deal done?
I think the bilateral relationship between Europe and China is very important. So the BIT agreement, because we should go beyond bilateral relations, because we are facing a peculiar situation in global affairs, where the United States, the biggest power in the world, is retreating from the world stage and is resorting to the sort of unilateralism, while we need a more international cooperation to maintain global governance, to maintain the momentum of global growth. Because in the middle of the pandemic, we need to find some new incentives to push up the global recovery, while the BIT could play this role. While the BIT will be a fundamental text to redefine our relationship, or economic and trade and investment relationships, that will insist on the necessity of multilateralism in global governance. So I think that the BIT is very important, both for European Union and for China, but also it will play a very important in giving people a sort of confidence in multilateralism.
Yeah, expectations are extremely important, and we do want to see more international cooperation between the world's three largest economies, the European Union, the United States, and China. Mr. Ding, let me ask you this. In terms of market access here in China, the progress that you've seen throughout the past few years, China's side, it has made significant changes, I feel. The number of sectors that are off limits for foreign investors will be cut to just 33 in 2020 from 40 in 2019. We're talking about the negative list, of course. That number was around 93 in 2017, and it was even higher when the negative list was introduced in the Shanghai Pilot Free Trade Zone. What else is China doing to expand its market for foreign investors? How would you evaluate the progress of market opening?
You should understand that that's the first time that Chinese government would implement a sort of a negative list. So for the beginning, Chinese government was more cautious about that. So the negative list was used to be very, very long. But in recent years, we just try to cut off the negative list, to reduce it, and to put it into a practical way. So I think that we should negotiate both with the European Union and the United States to see how China could adapt to this new practice, which is negative list. I think that we made tremendous progress in this regard because if only we look at the list of the negative list, the list has been shortened very, very sharply. So it shows that Chinese government is more confident on these. We will open more broadly Chinese market to foreign service industries, and that's why I think that between the European Union and China, we can reach a sensible agreement beneficial for both of us.
Okay. Mike, I want to follow up a little bit with China's reduction in its negative list, because European companies, they do talk and complain about China's market access as one of the key issues for the bilateral relation. What is, you think, the perspective from the European side on China's negative list mechanism? Because we have to remember China is still a developing economy. And negative list actually is quite an advanced trade concept. I mean, NAFTA was built on a negative list. Usually advanced economies have more of a negative list before they develop to more mature levels. So what's the perspective from the EU, think, on China's huge reduction in the number of sectors that are off limits?
Yeah, some very good points. I think generally the EU are a little bit naive or a little bit blind in trying to understand the Chinese side of things and the development, the emergence, the internationalization of the Chinese economy, which is still very relatively recent. And they're, to a certain extent, perhaps spoilt with what has been a very open, liberal trading, investment region, more so than anywhere else in the world, obviously with economic integration going right through to the single currency, and even that was over 20 years ago. So I think that there's a bias there on the EU side, and I think they have to be far more objective. And also, I think at the company level, the EU companies need to respect the fact that they're there not to just reap the rewards of an increasingly affluent middle class, but also to nurture Chinese brands as well and work with Chinese brands in co-branding operations rather than just stamping their brand on the Chinese economy. So I think there really is an education needed on the EU side to understand more fully why access is improving and improving quite significantly, but it's not going to happen overnight.
Yeah, I mean, significant progress was already made in just 4 decades of reform and opening up. And when we take a look at the big picture, Mr. Ding, I want to ask you this question, because China has recently come out and said it does hope to see domestic consumption and the domestic economy supporting its growth going forward. Do you think it's possible for China to, on the one hand, support its domestic economy while also cooperating with the EU as sort of, I would say, this double engine of the world, for the world, in terms of a post-pandemic global recovery?
Yes, I think for a Chinese economy, it's very important to have its domestic market strengthened. And I think that the Chinese government is well aware that with this pandemic and global recession, China cannot rely on its robust external demand to drive its economy. So China has to shift a little bit from the export-driven economy towards a more domestic consumption-led economy. And so far, we still have some room for maneuver in this regard because we still have a huge market which is not fully mobilized. Chinese government is taking advantage of this large scale of its market to try to promote some domestic consumption. But on the other side, as Chinese market is growing, so China is becoming a very, very important driving forces for global growth, even for EU export, because since 2 years, since China held the first import exhibition, import expo. So China has become a very attractive forces in the global market. Last year, China's retail sale just has overtaken the United States. China has become a real biggest market in the world. So China will continue to provide more opportunity for especially for European exporters and to support Europeans' growth. If you look at Germany's export towards China, Germany's export is growing steadily in China, in Chinese market, and that helped Germany to maintain somehow stable economy growth. And that's why I think that our cooperation is somehow in both ways.
Yeah. And again, one of the biggest points of cooperation, I think, down the road, Mike mentioned, was the service sector. As China's per capita income rises, urbanization drive continues. Lots of opportunity for services as well, in addition to consumption and goods. Mike, I want to also ask you, because China and the EU are obviously inseparable in terms of trade in goods and services. Of course, for the past 40 years, we see 1 billion euros in goods being traded across China and Europe every single day. But that doesn't conceal the enormous ideology chasm, perhaps, between China and the EU. What role do you think these tensions play, and are they surmountable? I think, at least from China's side, we want to see that political and economic differences are set aside. Let's focus just on doing business and focus on the economy.
I think that there are issues. Obviously, as you say, there are different political systems, different political ideologies. I don't actually think the differences are insurmountable. I think the economics generally sort of wins out at the end of the day, and the economic gain will satisfy both parties mutually. It's certainly, again, I think, good to discuss and good for, again, particularly on the EU side, to understand the history there, the Chinese political system. I think that there's been an ideological shift, actually, in the EU over the last sort of 30, 40 years, away from state intervention, state-led investment, and obviously that's working very, very well on the China side, and why not? And long let it be the case. So I think there are issues. I think they're surmountable, and they're surmountable by sealing good trade deals and good investment environments, so you let the economies flourish, and that really is the way forward.
Well, Mike, we've gone through 31 rounds of negotiations in this China-EU bilateral deal. We're heading up to the 32nd round, I believe, starting September 21st through the 25th. One of the trickier aspects, or one of the concerns that European firms have risen in terms of doing business in China, is perhaps the role of state-owned enterprises here in the country. But there is a WTO ruling between the United States and China earlier that said simply showing that a company is owned by the state is not enough, is not sufficient to demonstrate actual state involvement. What do you think about European companies and their concerns about SOEs here in China? Is that overly warranted?
Again, I think the concern is misplaced, and I think it's largely born out of, again, this sort of ideological shift and privatization program that has swept across Europe from America, starting with I think it was telecommunications in the 70s, through to public utilities, across the board, across Europe, even sort of left and centre administrations in Scandinavia have followed some sort of privatization policy where private sector is seen as is king, and the government really crowd out investments. I think that's partly where it comes from, and I think it is misplaced as well. I think, obviously, I'm in contact with China. I've lived and worked in China for many, many years, and again, state ownership does not mean state involvement, and state ownership can be a good thing for competition. So I think, again, more communication and a more open-minded approach on the EU side, I think, is the way forward.
Okay. The world certainly could use more communication going forward. Many thanks for your insights on this. Thank you to my two guests there, Mr. Ding Yifan, Senior Fellow at the State Council Development Research Center, and Mike BASTIN, Senior Lecturer at the University of Southampton, joining us there from London.